my name is Chris Granary. I'm with EOS Property Group. I want to spend a few moments talking to you about different sorts of property investing and how they suit different people at different times. I also want to introduce to you our armchair developer concept, which is the most exciting strategy I've ever seen in property investing. Broadly speaking, there are two sorts of property investors. There's the investor that purchases for cash flow, or alternatively, the investor that purchases for long-term capital growth. The long-term capital growth investor buys good quality properties in good locations that will generate capital growth for them. They tend to hold them for the long term, 7 to 10 years, certainly for one property cycle, and then at that stage sell the property and take the profits, or alternatively use the growth in that particular property to leverage their way into another investment property. This is a highly effective strategy and has been successful over the last 30 years, particularly in Australia, particularly in capital cities. However, a couple of things you need to be very certain about. You've got to ensure that you buy the right property in the right location for long-term capital growth, and you must be convinced that you can meet the inevitable weekly outgoings that negatively geared properties always generate, at least for the first 5 to 7 years. The alternative is cash flow positive properties, where you purchase a property such that the rental return is greater than your outgoings, thus producing a small weekly salary or income, if you like. This sort of property, this sort of investing, often suits the person close to retirement that wants to generate an ongoing income for themselves, or alternatively for the long-term property buyer who has a lot of negatively geared properties and wants to even out the shortfalls on a weekly basis. Unfortunately, many cash flow positive properties are in areas that have doubtful capital growth, and that can become an issue. So both strategies can be effective, whether it be cash flow positive properties or whether it be negatively geared properties for capital growth. Both have their advantages, but both have their disadvantages. What we wanted to do at EOS was to take the advantages of both concepts, pool them together and create a product that combined both cash flow and capital growth together. And with this in mind, we've produced our armchair developer concept. As many of you are aware, a developer will source a block of land, he will coordinate the development approvals, the building approvals, the construction finance, the build themselves to complete a project and make profits of around 15 to 35%. With our armchair developer project, the concept is that we employ the expertise, the experience, the knowledge of a professional development manager, and he does all the work on behalf of our investors. So consequently, it is the investors that make the developers profit. Let me give you some examples. Feasibility study we did on a project in Bassendean, which is a suburb in Perth. We were able to produce 3-bedroom, 2-bathroom, double lock-up garage units on a site there for a total outlay to the investor of $360,000. At the same time, identical units were on the market for $450,000. So the potential capital gain for our investors was around $90,000. And because they were paying well below market value for the finished product, the comparative rent returns are much higher, around about 6%, slightly more. Similarly, with our current project in South Hedland, which is a mining town in the north part of WA, we can get 1-bedroom, 1-bathroom units on site, total cost to investor about the same, about $360,000. But those same products are selling currently for $520,000. So there's again a potential capital gain for our investors of $160,000. And interestingly enough, the rental value of these properties is around $1,100 per week, about $57,000 per year. So there's a significant cash flow positive aspect to this development. So as you can see with both of these, we're able to combine the benefits of long-term hold, the capital gain, and we're also able to provide excellent cash flow. We're taking the best of both investment strategies and bringing them together in our armchair developer project. So it turns out you can have your cake and eat it too. You can get capital growth and you can get cash flow and combine the two together in a single project. Now obviously folks, you need to know more details and you're going to have some questions, so please ring us, email us, get all your concerns addressed, but let's start a conversation. This is a spectacular investment concept and we can't urge you enough to get involved. So please get in contact with us and let's talk it through. I look forward to catching up soon.